Okay.
I like to have a little mystery. You can put that up a teeny bit.
I need to hear it?
Like right here, and you can quite hear him that well.
That's good.
Okay.
Okay, you guys are good.
Okay. All right, welcome to Kiss My Assets. This is Jamison Manwaring, and I am co-founder and CEO of Neighborhood Ventures. And I have a good group of folks today to have a discussion. It's near the end of January, the first month of the year, and it's been a volatile month when it comes to all things investing. And there's a lot of different elements in play right now in our environment. So we've seen the market go down, we've seen inflation go up, and so we're going to have a little discussion about how that impacts us as investors, and what everyone's take on it is, and where we go from here. So we're going to go around the horn. Everyone gives their 20-second elevator pitch on who they are and their background. You're up.
My name is Grayson. I am a 19-year-old college student and aspiring entrepreneur at Grand Canyon University in Phoenix, Arizona, and I just started working at Neighborhood Ventures with Jamison Manwaring and these lovely people over here. That's pretty much it. I'm a digital marketer. Yeah.
Welcome, Grayson.
Thank you, Jacob.
I'm Heather Andrews, and I am over investor relations, and I like to take naps.
Lovely.
That
I
was,
like that.
That was a great elevator pitch right there.
That's perfect. Yeah, my name is Jacob Abramson. I'm a 22-year-old, recent NEU graduate, financial analyst here at Neighborhood Ventures. Thank God I found Jamison on Instagram, out of all places, and he took me under his wing, so I'm here now. It's exciting. Yeah.
We got some smart people around the table here. So, and when anyone says something about naps, it just makes me go, yeah, you're right. Naps are very underrated. So I'm glad with all the crazy stuff that's going on right now, that's the important stuff.
Maybe we
Take
should
a little break.
I think
Yeah.
we should implement like a nap pod.
You take naps?
Yeah, naps are critical. They're important.
Well, at a certain age, you don't have control anymore. Like, the nap takes you.
That's narcolepsy.
All right, so let's jump in. So the biggest news when it comes to investors is what's happened with the market. And I was feeling this at the end of the last year that typically every 3 years there is a market correction, especially when we've seen big run-ups. So we saw a big run-up last year in what the stock market was doing. Yeah, in stocks, in crypto, in especially those high-growth stocks, tech stocks, a lot of those single-name stocks like Peloton and Zoom that were related to COVID and the pandemic did really well. And now here we are, and in January, so far, the NASDAQ is down 12%, which is NASDAQ is mostly tech stocks. S&P is down 8%. That's the broader market. And then also cryptos have been way down, 23% for Bitcoin, and it had a fall at the end of last year. This is just what it's done year to date. So there's a lot of red in these numbers. And what do we think this means? Any viewpoints on as we talk to investors or as we invest ourselves on where we go from here?
Well, if you're smart like me and you bought when there was the ultimate hype, what was it? A few months ago, maybe I bought Bitcoin and Ethereum and some other ones that I'm not proud of.
Dogecoin?
No, just a little Shiba Inu. Don't worry about it though. Yeah, so I'm down about 45%, but I'm holding. So.
Well, that's why we have you on here, because you have such good financial advice.
Oh yeah, I mean this is not financial advice. You should definitely
great to hear.
You should talk to your
great to learn
financial
from
advisor.
So you
folks.
bought at the end of the year?
Oh yeah.
Basically. Yeah.
Well, I can tell you I bought zero, and I am still at zero, so I'm probably doing better than anyone.
Yeah, you're in
I'm
what's
ahead.
called a cash position, because you aren't in this game of the market. So you just saved yourself about 12% of potential losses.
I'm very savvy.
So that was smart of you.
I mean, it's crazy when the market goes down in one day what it usually goes up in 1 year. That's
Yeah.
pretty crazy. But.
Yeah, and all my friends that work on the stock exchange and in the investment banks, it's just been a very volatile month, meaning a lot of activity, a lot of buying and selling. That's actually how banks make money, is through the transactions. So they're very happy because there's a lot of people getting out of positions. There's new people coming in. every day it's very up and down. Yesterday it was down a chunk. Now then it recovered by the end of the day, vice versa the day before.
And one of the craziest things that I saw was, I think, was it yesterday that Tesla had their earnings call? Was that yesterday? So Tesla had like this crazy earnings call, and people called it like the biggest earnings call like ever, like known to man. And so their stock, I think, went up maybe a few minutes after that, to up like 4%, something like that. These aren't like accurate numbers, and then by the end of the day, it was actually down because the market's so bearish right now that the market pulled down a stock that had its best, like a company that had its best earnings call of all time. And they're talking about all these exciting things like robots and saying that their actual Tesla cars aren't even their number one priority anymore. And that's the thing that's making them the most money. So it's kind of crazy, but.
Yeah, and then I think this kind of is a good segue into the next topic, which is on everybody's mind, which is inflation and prices on our goods. So as we got to the end of the year, the numbers are about 7% increase on year for cost of consumer goods. And at the same time, wages only went up 3% in that year period. So that means the stuff that we're buying is a lot more expensive, but our wages aren't keeping up.
Yeah, my Diet Coke is gone up.
Yeah, what is Diet Coke now?
It's all my money. Which means I need overtime because that's essential.
Cane's is more expensive.
Really?
They had to change their whole menu board and increase the prices. All the food stuff is up.
I think it's crazy, not to get political here, but I think it's crazy how we can, like, the government kind of gave money to kind of stimulus checks, unemployment checks, which used a ton of money that we kind of printed, and we didn't really take that from taxpayers, and then we gave it to people, but it somehow still ends up usually back in the pockets of people who own these companies like Cane's or Tesla or whoever.
Well, it created an economic activity. So
yeah,
that's what the fear was going into COVID, was there wasn't going to be any economic activity because everyone's hunkering down. So they wanted to spur it. Mm-hmm. And by doing that, people spent the money, but then it's always a supply and demand fundamental. So when all this demand for goods and products went up, the price of everything also went up. Yeah. And then you have on the other side the supply constraints with people not working as much, not getting stuff from China for goods and products, and they're sitting out on boats. So both of those things impacted
There's a lot of variables in play that are contributing to the rise in inflation.
And it kind of all happened at the same time.
Right. It's almost like the perfect storm of everything just happening at once and says, hey, here it is on a golden platter of inflation.
And by printing money and trying to help people out and causing inflation, you actually make things more expensive for the average consumer.
Right. Where are you guys seeing that the most? We already talked about Diet Coke, food, gas. Gas is about
Personally,
$4
for me,
a gallon.
It's in rent.
Yeah.
So I live on the east side of the valley, and trying to move over here in Phoenix it's hard to find a place that's reasonable, that I can afford, that I don't want to pay $2,000 a month for a one bedroom. So that's kind of like the area where I see it's just insane.
Yeah.
But it's good if you hold the assets because as inflation rises, you can go ahead and increase those rates to reflect that.
Yeah.
That rate increase.
And rents were up about 25% year on year in Arizona. So $1,000, to use easy numbers, $1,000 rent last year is now $1,250, and so that's a pretty big increase.
Especially when wages aren't up that much.
Yeah. So and then wages are up. If you're making $1,000 a month, which just for example, now it's only up 3%. So
$1,030.
Yeah, it's not it doesn't quite offset that.
Yeah.
But we also know that I think wages are going to continue to grow up because there's still a shortage of workers. Mm-hmm. So that now it makes more sense to me why people aren't going back to work as quick. They're holding out for higher paying jobs because they're like, things are costing more, and employers are going to have to increase their wages to get people back.
They're going to have to adapt and to get that talent, to get that. that labor pool back into working.
Because they didn't do
Yeah.
enough last year at only 3% increase.
Yeah.
And you almost
Right.
can't afford to have a minimum wage job and to live
No.
like in a Phoenix apartment or wherever you want. Like you almost
Yeah.
can't afford to do that anymore, even if you're working like 40 hours a week.
Well, and to Jacob's point about rent, we also saw an article came out, Bloomberg yesterday, that over the pandemic, housing units and housing real estate nationwide increased by $10 trillion. So in addition to the money that the Fed or that the government sent to folks for stimulus, the Fed also kept interest rates very low to spur growth and to spur economic activity, and which really fueled this boom in housing. And in the other at the same time, people were living in their little apartments saying, oh man, I would really like a house because this pandemic's making me realize I'd like to have a yard. So they're wanting to
That's what I did.
upgrade. Yeah.
Those rates went down, and I was in a little apartment in New York, and I said, "Oh,
You're the poster child of
Yeah.
you got out of New York.
Which I love,
What's rent in New York for 2-bed, 1-bath or
Well,
where
I can
you were
say
living?
I was on the Upper West Side, and I had a beautiful, very large studio that I paid $2,000 a month.
That's a pretty good deal, actually.
It was a pretty good
Right.
deal. It was a historic building. It was a fifth floor walk up, but it was excellent. But $2,000,
Yeah,
which
for
is
a little studio.
for a little studio, and I came here and bought a big 3-bedroom house, and I paid about half that.
So
Right.
I like to hear a lot of stories of like people from, especially New York, like once all the bars and restaurants shut down, they kind of figured out, what am I doing here? Because like, if that was all I had to offer, it's like, well, I kind of, maybe I want a house. Maybe I want to move out of the city, the big city life, and go more towards, the suburbs and. What was
And
your-
especially if you can work remotely.
Right, yeah.
Yeah.
And it's like, why pay $2,000 a month
Well,
in
I
a
will-
city where I have no amenities?
Yeah.
No
Defend New
bars,
York to the
restaurants?
death. But I was looking at a bigger picture. The pandemic kept me very separated from my family, and I thought,
Right.
I want to be closer to my
I think that was
family.
another
I
big
want to.
thing, too. Yeah.
yeah.
People realize, you know what? I kind of want to be with my family now.
I don't know.
I want to move back.
I don't know what the stats are in that, but I wonder what percentage of people went from working remotely and actually stayed working remotely from working like in an office or a corporate job.
Well, we're watching it in Arizona. Everyone who's moving here because they can
Because
work
they
remotely
can,
now, and they're
and
like,
they're-
it's cheaper. I'll move
Yep.
here. Yeah.
Absolutely.
So I think the big question with real estate is where does it go from here? Because of this tremendous increase in the price and the value of real estate during this period. But as we look over the next several months, there's still a big shortage of housing units available. There's not a lot of inventory on our MLS here in Phoenix. There's not a lot available if you're looking to buy an apartment building. Even if you're looking to rent, there's, housing continues to be tight. And so as we get out of these short-term things that happened last year, it doesn't change until the supply increases, because you still have all these millennials who have been okay renting, and now they're getting into the buyer pool. And so where we go from here, what we are seeing is we think rents continue to move up in most of these markets, not 25%.
Right.
But I think it's very likely you'll see a 5 to 8% increase this year, 2022, on rent. So they keep moving up, which outpaces normal. Normal would be a 3 or 4% increase,
Yeah.
and now they go up another 5 to 8%. But at some point, with housing, you're going to hit where people are getting priced out. And then that's when the market will slow back down to kind of more normal level.
Corrects a little bit. Yeah. Right.
Yeah.
Because wages have to go up equally or just
Ultimately.
in order for people to keep up and be able to pay their rent.
Yeah.
But
But then there's places like New York and California where a larger proportion of your wage goes to housing, and everyone's okay with that. But in places like Arizona, they're not used to that, getting more used to it, just like Jacob is. He's like saying, I just going to have to pay more proportion of my wages to rent if I want to live in a certain area.
Right.
And then the last thing that we'll touch on that's happening, and we're not geopolitical experts here, but that's impacting the markets, is what's going to happen with Russia and potential conflict there. Anytime there's something like that happens, where you have major economies, major countries, U.S., Europe, get engaged in a conflict, it's not good for the economy.
Right. Yeah.
It's just a distraction. It slows things down. It brings a lot of uncertainty into the market, and that has a lot to do with how assets are priced. Is how do people feel things are going and what direction they're going in? And if there's a big conflict breaks out there, it's not going to be helpful in anything.
I don't quite understand what's going on. Like, do you have anyone?
Well, I think Putin gets a little restless. He gets a little bored. He's been riding shirtless on his horse, and he's like, you know what? Ukraine looks fun, and so they're sending some ships over, and
they have 100,000 troops,
that
Russian
are
troops now on the border.
creeping up. Yeah.
And the U.S. is helping Ukraine because that's their part.
Yeah,
of
we've been.
NATO.
I mean, like you said, no means an expert on any of this on this topic, but I think like since 2014 we've been funding them.
Yeah, and it's not just us.
Military
It's,
aid, right?
it's kind of our NATO allies.
Yeah.
And the European Union, and we've got right now the U.S. has I think 8,500 troops that are on alert.
Right.
Just in a minute we might need you.
But 8,500 compared to 100,000, it's not.
Yeah, 8,500 is just a starter, and that's just us. But we're looking at a coalition of, and this is an investment discussion. So we're looking at big economies like the U.S., like the U.K., like Germany, France, Italy, pulling troops out and deploying troops together against another huge economy, Russia, especially when it comes to energy. So we get the world, especially Europe, gets a lot of their energy from Russia. So
they're especially Ukraine too. They have
huge
reserves in oil.
So
it could be interesting. I mean,
it creates a little pause. There's always something else. So COVID's been on our minds for the last 2 years, and now COVID's going away and something else is coming up, and that's just
you got to keep it interesting.
The economy works.
A house of cards.
Yeah.
The best case scenario there, I think, from an investor is that there's de-escalation, that we can go negotiate something. A lot of this is positioning for negotiations. So they all, Putin knows what he's doing. He's trying to put a lot of pressure on us to go negotiate. His fear is that Ukraine gets weapons, NATO weapons, and it's right on the Russia border.
Right.
It's kind of, if Mexico had weapons and they weren't an ally to us, that would be concerning to us. But then there's also people who know that he just has ambitions to take over. They already took over Crimea, several years ago. Yeah.
We're hoping he just, finds something else catches his attention.
Yeah. Best case scenario is we go negotiate. He's putting his chips on the table. We go negotiate and figure out something without a real conflict.
Right. Yeah.
But yeah, here we are in a very interesting year, and we had a very volatile first month. I say this all the time, but I am glad that I am invested in real estate right now. The market is down 12%. Real estate is up 12% because our projects are still doing great, and we're still paying our investors 12%. So the delta, at least in January, on an annual basis, is 24% for the market versus, and that's real estate tends to just keep moving in its own direction, where the market's always up and down.
Yeah, I like that. Yeah. What's that one quote? It's not about timing; it's about time.
Yes, I don't
investing
even know
over
what that means.
Investing over the long term,
Yes,
and that's the great thing about real estate.
I don't know. Have you ever heard of Meet Kevin on YouTube?
Meet Kevin.
Do we like Kevin?
Well,
I'd like to meet
his
him.
name's just Kevin.
But
he's been like telling people his entire life on YouTube. He's like this. He has like 2 million subscribers, or whatever. He's been telling people his entire life, buy the dip. It's always a dip. It's always going to keep going up. Just keep buying. And 2 days ago, he sold his entire $20 million stock portfolio, and then told everybody, and they were like, "Oh, you rug pulled us," and blah 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 blah. But ever since he did that, like, he has like very extensive knowledge on the market and stuff. So he's doing well now because the market went down, and so he made a good decision.
Yeah, he saved himself. Yeah,
he's essentially day trading with $20 million.
Well, that's when you go in when it all crashes and you buy the same things you already had, but just for a lower price.
And now you own more shares and for the same
at a lower price. Yeah. Well,
I think the market sounds like the boyfriend that plays the guitar and is probably fun, but and break your heart. But then real estate is the nice
husband.
Yeah, he's the guy next door who's nice to your mom.
That does the lawn.
I like that analogy.
And the older I get, I just want the one who's nice to my mom.
I like that analogy, Heather.
That's pretty good.
Well, I think
Anti-single.
we'll wrap it with the boyfriend analogy.
Yeah.
How can you beat that? And
Yeah.
we'll see what February brings. We'll continue the boyfriend discussion because it's
Perfect.
Valentine's Day. Valentine's in February, so we'll keep
My favorite.
we'll keep that theme going.